everyone. A big welcome from IWRA to our Public Banks and Public Water in Europe webinar. We thank you for joining us today. Today, our panelist includes Milo Fiascanero, who's the Executive Director from Aqua Publica Europea, Thomas Marois, who's joining us as the reader from an SOAS from University of London, and David McDonald, who's the professor from Queen's University, Canada, and also the director of the Municipal Services Project. For those joining us today, IWRA is an international network of researchers and practitioners who work on a multidisciplinary range of water resources issues. It provides a global knowledge-based forum for bridging disciplines, geographies, and by connecting professionals, students, individuals, corporations, and institutions who are concerned with the sustainable use of our water. We encourage you to consider joining our association as a member. More information on how to join can be found on our website at iwra.org/members. I'll include some information on that in our chat. Today, the theme of our webinar, again, will be on public banks in the water sector. This webinar will help introduce the audience to learn more about the role of public banks in the water sector and to learn from key research findings on their impacts and benefits in the water sector. I'll soon post in the chat a link to the Water International special issue on public banks, and I'll put that in the chat so you can access the special issue. Let me just briefly explain the format of today's webinar. We'll first have presentations from each of our panelists. We'll have a little bit of opportunity to answer questions following each presentation. We'll have a brief dialogue between the presenters, moderated by our moderator, and then we'll jump right into a longer Q&A session for you guys. So please make sure you put your questions in the Q&A box. And leave the comments for a comment box. And while you're at it, feel free to jump in the comment box. Please let us know where you're coming from. Give us all a big introduction. We love to see who's joining us today. And with that in mind, I will pass the floor over to our moderator, Jim Nickham, who's the editor-in-chief at International Water Resources Association.
Thank you, Lindsay. Say I'm the editor-in-chief of Water International, and I've had that position for the last 15 years, also former vice president of IWRA. And I'm really pleased to be asked to moderate this panel. As you saw in the video and in Lindsay's introduction, IWRA is multidisciplinary, and we try to be a forum for presenting the latest thinking. It cuts across the kind of policy and science to policy interface. In the past, we've looked at a number of issues, including smart water management and various, of course, the problems of ownership. I would say, to add to what Lindsay said, this is not just public banks, but this is public banks supporting public water. Now, we've dealt with public water and public and private water before. We've dealt with issues of equity that some of that's meant to address. I myself am working on, in my own research, I'm working on the water economies of global cities. But in none of that in the IWRA and my own have really considered the questions of finance. And I think that's a big kind of unknown terra incognito for scholars in this area. So I'm really delighted that we have the opportunity here to offer you a publication of a very interesting set of papers on public finance and public water, so far limited to Europe, but with aspirations to the globe. And basically, also the role of a moderator is basically to shut up and let the speaker speak. So I will turn the floor over to the first speaker, which is David McDonald.
Thank you, Jim. I'm just going to pop my slides open here, and I've just put in the chat box a link to the website. Excuse me, I'm frog in my throat right now. A link to our website, the Municipal Services Project website, where we have lots of different kinds of publications available, including, you may be interested in a very large volume we produced during COVID on public water and COVID-19 and the impacts and responses that public water operators around the world took during COVID-19. Just by way of background, our focus is to look at public services, public water, public health, public electricity services. And we focus particularly on trying to identify, in quotation mark, good public service practices. How do we know they're good? How do we measure them? To what extent are they reproducible in other parts of the world? And this is a critical lens. We're not here to simply celebrate something public because it's public. As I'm sure all of you know, it's not too difficult to find poorly run public services in virtually every sector. So we really are about critically investigating what constitutes a good public service. How do we measure that? How do we reproduce it? To what extent is it politically and culturally contextualized, et cetera? So the role of public banks is actually something relatively new to me. My colleague Thomas Marwah, who will speak right after me, is the real expert on public banks. But it's so obvious to us in the work we've done in the past that the link between financing of public services and also the tensions around privatization related to that and the role of private versus public finance is something that we've always sort of paid attention to. And so this is our first systematic foray into trying to understand the link between public banks and public water operators. Now, I just realized before we started here, we didn't actually have a slide in this presentation here to describe what a public bank is. It's certainly in the opening chapter to the special issue, so I would certainly encourage you to have a look at that. But I will say very briefly, and Thomas can expand on it if he wants later. We're talking here essentially about banks that are broadly within the public realm. Now, that can mean ownership by the state. But it can also mean other governance structures which give the state control over or a meaningful engagement with a financial institution. And this can happen at a municipal level, it can happen at a national level, and indeed it can happen at a transnational level with large multilateral banks. We are not interested in this research on the big multilateral banks like the World Bank. It is technically a public bank. We're more interested in national and subnational banks that are owned by governments within a country, but sometimes operating across borders. And in fact, we do have the one European bank in this case study, selection of case studies. So that's really what we're interested in. And for those of you who aren't familiar with it, public banks are big players on the international scene. There are some 900 public banks around the world with about $48 trillion in assets. Thomas can maybe update on the latest stats on that. And they are some of the biggest banks in the world. Indeed, the largest banks in the world are the Chinese state-owned banks. Not necessarily the best example in terms of democratic governance and openness and so on, but there are a lot of very big and very small public banks around the world that play a big role in financing public services. So with that, the rationale for this research, as I'm sure everybody in the seminar is well aware, that water and sanitation sectors need massive investments. In the hundreds of billions, trillions of dollars around the world. And we're basically just seeing insufficient government spending. And it's a sector that's relatively easy to ignore, buried below the ground. Particularly sewage is not a particularly sexy thing to invest in as a politician. And so we are seeing massive underinvestments and some very old infrastructure that needs upgrading, combined with the need to address environmental issues and new technology, et cetera. So depending on where you're situated, I'm sure you can probably come up with a very large figure for what's needed for investment in water and sanitation in your country or your region. And we are basically saying as well that cost recovery models are insufficient for the long-term capital costs. We also know that many water operators aren't even able to cover fully their operating costs, let alone their very large capital expenditures. So financing is a major issue here. And as well, we're seeing limited private sector investment for a whole range of reasons. But the bottom line here is that to invest the money that we're going to need in water and sanitation infrastructure, it's going to be and has historically been largely public money. So why public banks? For one, they typically have a public mandate, and these vary dramatically from bank to bank. And it's important to understand what these mandates are and what they're tasked to do. I'll just mention briefly a relatively new public bank in Canada, the Canada Infrastructure Bank. Its mandate is actually to try and privatize public services, including public water operators. So from our point of view, that's not the kind of public mandate we want to see. We're interested in public banks mandated with strengthening and working with public water operators. And by and large, that's what we've looked at in this set of case studies. Historically, in the photo here of the NWB in the Netherlands, which is essentially the water bank, was established over 50, 60 years ago, and its mandate is to provide financing to public water operators in the Netherlands. That's all they do. Most other public banks work across multiple sectors, but their mandates are often to support public infrastructure and public water and sanitation. And indeed, there's a long history of financing public water, the NWB being one example. Also, some of the banks in the Scandinavian region have been lending water and sanitation projects for over a century. So there's a long history of public banks working with public water operators that we think are important to understand. And just we feel there's a massive potential for public banks to step in terms of the financing requirements needed for investments in water and sanitation. The private sector hasn't been stepping up, and most governments have failed to invest adequately. So we wanted to understand what this potential is. But as James mentioned at the start, there's been virtually no research done on public banks and public water. In fact, there's been relatively little research on public banks in general. This is, I think, due in part to a kind of private sector bias in the water sector. We've written on this before, and something like 85% of the articles that deal with financing in the water sector tend to focus on the role that the private sector could, or in their minds, should play. And there's been a very sort of anti-public bank bias in a lot of documentation as well by the World Bank, for example. So we're really trying to do a correction on the lack of research and what we see to be a kind of biased research on public banks. And it's important to point out that there's nothing, again, inherently good about a public bank simply because it's owned and or controlled by a government. There are lots of very problematic public banks out there. So what we're trying to look at here is public banks that have the kinds of public mandates to support public water and sanitation infrastructure in progressive, sustainable, and equity-oriented ways. So we took 8 case studies. One of those is actually a cluster of 4 banks in the Scandinavian region. We wanted to get a geographic spread of banks. We wanted to get different types of banks in terms of the scale that they operate at, their operational mandates, etc. It was also informed, as these things are, by availability of researchers and where we had people in different locations that were engaged with either the public banking side or the public water side of things. And I will say that there's very few people who sort of straddle those two sectors. The finance research tends to be very different from people who work on water and sanitation. So that has been a bit of a challenge for us, but I think we've done some really useful capacity building. And I should mention that we worked quite closely with the European Association of Public Banks and with Aqua Europa, and you'll be hearing from Milo shortly, in part to get access to and develop contacts with their member organizations, but also in developing the questionnaires and getting their insights in terms of what they thought was important and the kinds of things their members would be interested in learning about. So this is an exact list of the institutions, the banking institutions we looked at. I haven't listed the water side of things here, but just to give you a sense of the various different banks. And I did mention the European Investment Bank, which is a multilateral bank that works within the EU and in fact beyond. And in the case of Germany, KfW, which is a very large public bank in Germany, we actually looked at their operations in Latin America and the lending that they do there. They also are very active in lending in the water and sanitation in Germany, but we wanted to get a sense of a European institution operating globally. So essentially what we did was try and get interviews with as many senior officials in the water operator side and on the public banking side as possible. This was during COVID, so the vast majority of this research was done online, which in the end, I must say, was actually quite productive. That's the first time I've done that kind of extensive research online, but I was pleasantly surprised at how well it went, and I don't think in any way diminished the value of the work that we did. Certainly scanning through lots of background documents, planning workshops with partners to try and get as much consistency as we could. For those of you who are willing to plow through all 8 case studies, you'll see that in fact the storylines are quite different. There's nothing. There's not a lot of similarities amongst the European public banks, but we tried to make sure that our research was as consistent as possible to reduce those kinds of biases, et cetera. And then I mentioned working with the EAPB and Aqua Publica to develop this work. So the outputs were a special issue of Water International, which I think has been put into the chat line. And that came out in August. And then Routledge is going to publish a book version of it, which will be basically sold to university libraries. And that's coming out in February, I believe. So it's basically the same thing, although the book version does have a short conclusion that Tom and I wrote. All right, and with that, I will hand it over to Tom to talk about the key findings of the research.
Great. Thanks so much, David. And welcome to everybody, whether it's a good morning or good afternoon or good evening to you. Thanks for joining us today. We're very happy and excited and glad to be reporting back on the results of our research over the last year or two, and particularly to a mix of academic and practitioner community, because we really do want to raise the profile and the discussion around public banks and public water and how that has knock-on impacts to other public services around the world. And so, a huge thank you to the IWRA for this invitation, for the special issue, of course, and to Jim for that, and for holding this webinar today. I want to talk a little bit about then some of the lessons learned and some of the cautionary tales from the research that we've conducted in Europe. And the first, it's always good to start on the positive note. So, one of the results, I guess, one of the key things that held by and large across the 8 different case studies of public banks and public water, and what's, some of the potential of looking at a public bank, investing in water, was that it could do so and do in fact do so in ways that are patient, meaning that they're not investing in public water just to as a stream of revenue, but to go in for the long term. And so they're investing in a service that's important to society, and they're able to do so on terms that, on average, if not always, but across most of the case studies, and I would say, these are lessons across most of the case studies, but there is divergence among them, in ways that are low cost, so relatively cheap finance, or cheaper than you'd find typically, just going to a commercial lender, and appropriate finance, meaning that quite often they're negotiating the terms of the loan that are appropriate to a public sector provider, and with the terms that the providers like to see in terms of stability and so on. So it's a type of financing that in general we want to point to, that we want to see public banks delivering patient, low cost, and appropriate finance to the sector that they're engaging in. Next one, David. Suspense is killing me. Probably have to tap your. There you go. Yep. You can leave that. Okay. So the other quite lesson that learned across the case studies is that they are lending, that the public banks are able to lend universally across the public sector. So we're looking at water. So in many cases, not only were public banks able to lend to quite large water providers in some cases, large regional providers throughout the country, even national providers of water lending at quite significant scale, but they're also able and capable to lend at a smaller scale to smaller municipalities or smaller regional providers as well. And that's within the water sector, but the lessons sort of spilled out that in many of the cases the public banks would also be doing so with other public sector services as well. Next one, David. There we go. And I think one of the most, I would say, probably unexplored and least explored, but really necessary questions to be raised, and something that came up through our research on this interface between public banks and public water, is this question of ownership and governance, and the potential for democratic ownership and governance of public banks in terms of the kinds of boards that are running these banks. So again, significant variance between the 8 different case studies, with some of the boards being pretty substantively representative and democratic. So the KfW Development Bank, the KfW Bank in general, will have members of the ministers directly on the board that are chairs of the board, but alongside 37 other representatives from society, from other banking institutions to labor unions, and so on. And their positions are set out in public law in terms of their governance. To other forms of democratic governance, where they'll have specifically identified members from the general public to sit on the board, and other government members. But I think there's certainly a much greater capacity or opportunity, particularly across Europe, to democratize the boards a little bit more. So we can look at examples of relatively or substantively democratic examples like Germany, and I think there's certainly space within some of the other institutions to increase that representation, and increase that representation that identifies specific representation, for example, from the public sector or from public labor unions and so on, to sit on those boards. And that is a way by which you can begin to connect and rebuild that relationship between public services provisioning and the public financing of those entities. Next one, David. Before I talk on the expertise again, I did want to just note back on the democratic ownership one, that there were also examples, looking at the Turkey example, the IWRA Bank, where the representation of the board was an interesting mix of national representatives, but also representatives of municipalities themselves. That particular case is problematic insofar as the national overshadowed and dominated the board. But I think this question, and particularly in terms of public services provisioning and so on, of having municipal representation on a board and able to feed into a public bank, is also something that's quite promising and to consider across public sector provisioning in Europe and abroad. There are range of different models that we can look at. Absolutely, the question of expertise in infrastructure or in lending to go forward to infrastructure was an absolute key message. So in the multilateral bank, for example, the EIB, they have dedicated staff working on water infrastructure. The Dutch Water Bank clearly has a historic and a deep sort of ethos around public water provisioning and a knowledge of that sector. But also in cases like the Nordic banks, where they weren't lending directly per se to the water providers, but to the cities and the municipalities that would then on lend, they knew their clients very, very well. And this is an important element of in some of the more potential and promising cases, is that when there was explicit public collaboration, it was non-competitive, and they had capacity and understanding and an institutional legacy that they mobilized in terms of delivering the financing at patient, low cost, and appropriate forms necessary to those clients. There are, of course, worse examples where the public banks have, in many cases, abandoned some of their expertise and their public ethos, and you can point to challenging, in the next slide, we'll talk about that a bit. But certainly the potential to house expertise in public banks is a significant message. Next one, David. And part of that is having explicit social mandates. So the one case study that, I dabbled in various of the case studies, but one thing that stood out in the Dutch Water Bank and example, and in fact, the other Dutch municipalities of bank, is that they explicitly understand themselves as a public purpose bank. Their mandate is, they were a public bank that is by and for the public sector of the Netherlands. In the Turkish case, the IWRA Bank as well, they understand themselves, even though if there's problems of governance, they understand that bank as supportive of municipalities, and similarly in Nordic cases. So in many of the cases of public banks, their sort of founding mandate is to serve the public sector, society, and so on, and they build that into the operations of the institution. Next one, please. I think, it might be a bit of a surprising finding, if not unexpected in many ways, but there is a fair amount of collaboration between public banks, both in the direct funding of water. So you will have co-funding, between a national public development bank, which in some cases in Europe will have a cap on how much they can lend to any particular project, but doing so in collaboration with the EIB. So you'll see a fair amount of, European Investment Bank and National Development Bank lending, or we also saw cases of the Council of Europe Development Bank co-lending with national providers. And again, this is a benefit of the sort of public-public collaboration, that it's non-competitive in many ways. There's a friendly, and some of the interviews came back, they were friendly competition between the public providers, and understanding that they have a mandate to the public sector that they're delivering on, rather than trying to, they're pursuing policy objectives rather than profit objectives. Next. One of the, when a public bank is well governed, let's say, and ideally democratically so, but well governed in the way that they understand their mandate. They have a solid board. They're transparent and accountable to their societies. Then those institutions build up a legacy and a capacity and a grounding in knowledge and expertise that is understood and recognized and appreciated by the societies in which they exist. And this enables them to persist as an institution in society through political cycles. There is no example of a public bank that will ever and should never really exist entirely independent of the politics of society, just as there are not private banks that exist independently of the politics of society. But they should be respected and have the capacity to run themselves as expert institutions, and if need be, to be able to push back against undue political influence is a word people like to use, but at the same time, they should have the capacity to mobilize political directives at times of need. So certainly at times of COVID, that was an explicit lesson that public banks were able to, and were given a political mandate to respond to COVID, including in the water sector within Europe and abroad. Then those banks acted very effectively and very efficiently. But we do need those accountable and transparent governance mechanisms so that they can persist through political cycles and not be, potentially ruined by one particular government coming in and using it to its advantage versus another one. Next. And let's say in direct differentiation from private banks, and this goes to the foundational element of they function by and large and ideally, or they should be functioning according to policy, not profit. Public banks can then recycle the returns that they make back into the public sector. So there's two ways this happens. They either will have a mandate, as in the KfW, to recycle returns back into the lending capital, the base from which it can do further lending through the public bank. So that's one way that any returns are recycled back into the public sector. Or in other cases, public banks will pay out periodically a payment to the national government. So they'll pay out a dividend to their stakeholders, which are the public holders. And you'll see that in different cases. But in both of them, you're finding that the returns generated through the financing of many activities, but including the financing of public water, finds its way back into the public sphere in one way or another. It's not money that is then, siphoned out into private shareholder returns, or in some cases pulled out of the country back into the host or home institution in a foreign country or whatever. So it becomes a form of public recycling of resources and capacity. Next, I think we're on to the next slide now. Yes. So as David mentioned, and this is a really important message that I feel is important to deliver, and I always deliver, and the researchers on our collective municipal services agree on, that simply because something is public doesn't mean it's inherently or necessarily better. It's a sphere of potentiality, and there's enormous potential, no doubt, in the public delivery of services and including of financing and banking services. But in and of themselves, there is, just because it's public doesn't mean it's going to function perfectly. And we have case studies of that. And one of for example, one of the case studies on Portugal by Victoria Stadam stands out in that case, where she does a really good historical job of narrating the changes in public banks in Portugal and how they become very commercialized and corporatized. And to the extent that many of the public sector water operators are reflecting on their interactions with public banks, and there weren't that many, were saying, we can't distinguish the CGD, I might be getting that acronym wrong, but the public bank that she's discussing in the Caixa Geral de Depósitos in Portugal, they can't distinguish them from a private bank. So it was acting as if the public bank was acting as if it was a private profit-seeking bank, to the extent that the public water providers were like, well, for this reason, we don't really care whether we're borrowing from private or public funders. And they're also, so they're not a silver bullet because they're simply public, but they're also, and this is in some of the later bullet points here, in and of themselves unable to necessarily resolve all of the financing and funding issues that a country or society or community or municipality or water provider may and will face. So, just because we've got a lot of really great potential lessons doesn't mean that public banks, if you read the special issue, is going to give you all the answer. We give you some potentialities, but there are pitfalls. Next one, David, please. One of the biggest pitfalls or challenges, for lack of a better word, that come across in most of the case studies, and this is a reflection of 40 plus years of neoliberalism and privatization and the imposition of cost recovery models on public services in general, that's the relationship between public banks and public water is not immune to that. And so while there are cases and potential for low-cost patients, appropriate financing, in some cases at better than market terms, often the lending and the risk assessments of the water loan are still subject to risk assessments, and they'll be costed in different ways by the banks, resulting in higher and lower rates of interest, or better and worse terms. And part of that is, there can be in different cases greater pressure on the water provider to show that they can pay back that loan, that they're have enough income to not only cover their own internal costs, but to cover the cost of the loan. So when you're giving a loan, be it public or private, and if it's on market terms, and within Europe there is a lot of pressure around EU competition laws and so on, that the relation between public banks and public water is susceptible to cost recovery models in terms of being able to demonstrate the viability of that loan. Next one, David. And as David already touched on, there are massive gaps. They're going to be larger, particularly as we need to confront ecological challenges and the changing, climate change and so on. And that's simply cannot be absorbed by public banks themselves. They can be a tool within that, in a mechanism to manage that transformation, but there's going to have to be, significant capital investments at the national level to work with that, through which, it can be managed and transferred through public banks. But the debt is a pure debt model is probably unlikely to be able to resolve the massive gaps in infrastructure. Next, David. Which links to the other pitfall, which is the risk of debt traps. And again, depending on the country you're looking at, and there are different lessons in the 8 different cases. The instance of Turkey is quite different from the instances of Portugal or Spain, and certainly quite different from the Nordic models, and so on. But definitely, if the government and the water providers and the banks see the way out of the massive infrastructure gaps as simply loading on more debt and loading on it at close to market terms or something like that, and you're unable to have a fully cost recovery model that is also equitable and just, then inevitably the providers are going to get stuck in a debt trap. And that will have does have knock-on impacts on the public banks, because we also don't want the lending that the public banks do, be it to public providers or not, to undermine the long-term sustainability of that entity, of that public bank. Next, David. And this all means that public banks in Europe and internationally remain subject to the power of rating agencies and that means to some extent they are subject to that over public policy. So in some of the case studies, in particular the Dutch Water Bank, its mandate is to protect and ensure that it has a AAA credit rating. And it has good reason for that. It sees its maintenance of a AAA credit rating as its vehicle of pulling in otherwise mobile global flows of finance capital at the absolute cheapest rates, and passing those benefits on to the public sector, including public water. But that means that it is disproportionately concerned with maintaining that AAA credit rating, and which sometimes means that it has to moderate, and in our case, it's lending to the public drinking water companies, because there's a risk of impacting its credit rating. In other cases, the credit rating is they're less concerned because of national guarantees and so on. But nonetheless, we see that after 40 years of sort of market-oriented finance, that credit rating agencies do impact the logic of public banks. And that's something that we do need to think about and do further research on. David, next one, please. And I've mentioned this already, but it is something particular to the EU, not necessarily internationally, but the kind of, let's say, stranglehold that EU competitions law and state aid rules put around the public banks in terms of their ability to kind of really push forward on cheaper lending rates, because they can then be called up by the European Commission and or the country and asked to roll back on their concessionary or super low interest rates, because that would be against competition law. So there are some limits there, and particularly to European case that will be looking out at other international cases as we expand the research. Next, David. So let me just wrap up here then, and David, after I'm done, if you want to jump in there for a moment, you can sort of make some final notes if you want. But just to say that the Water International special issue is on public banks and public water in Europe. And we are now expanding through the Municipal Services Project and the Social Science and Humanity Resource Council of Canada research grant to the next phase of research, where we take our methodologies, our learning, and the baseline really of what we've done in public banks and public water in Europe, and looking at it in the cases of Latin America, in Asia, Middle East and Asia, and in Africa. And on the right-hand side are the associations of development finance institutions that we're working and partnering with in those three regions. The researchers are, as we speak, diligently writing and researching their papers, and we'll be, in the next 6 to 8 months, we'll be putting those final products together. But you'll be hearing more from us, and I see many of our colleagues and people who are joining are from the regions and countries in which we'll be generating further research, building on the findings that we've done so far. Thank you. Now, let me pass back to David, and I think might have a round of questions.
Thanks, Thomas, and sorry about my keyboard was acting up there with the slides. I will just say with regards to the research we're currently engaged in Africa, Asia, Latin America, what's really noticeable is the different capacity levels and very different sort of organizational cultures. And this was even true within Europe. I mentioned we conducted most of our work online with video interviews, et cetera. Some were very open, very willing to speak with us. I was lucky enough to do the work in the Scandinavian region where they provided us with all the information we wanted. But even within the European context, for example, it was very difficult for us to get access to the public banks in Portugal and Spain. We're also finding that, generally speaking, much more difficult in Africa, Asia, Latin America. And the public banks in particular tend to be very sort of, for lack of a better term, secretive organizations. And so partly what we want to do here is unpackage this sort of mystery around public banks. And they are really another form of public institutions, and they are public utilities like public water operators. And so we want to sort of see them that way and engage with them that way. But I will say, for those of you who are perhaps interested in research on this topic, getting in the door with some of the public banks in particular, and some of the public water operators as well, is a very real challenge, and something that we're still trying to overcome. So with that, I'll hand it over to Jim, and we'll go from there.
Okay, well, thanks, David and Thomas. That was a fascinating presentation, and we've got, we had 2 questions, and one Thomas just answered on the Q&A, and it disappeared, but it was by ACU Kibaroğlu, who is from Turkey and is a member of our editorial board. I wanted more specifics about how the Turkish bank operates. So perhaps you could elaborate on that to
Sure.
Yeah, for us.
Pleasure. The Turkish case study example is very interesting. I've done research and worked in Turkey. I've studied in Turkey for part of my undergraduate, so I have a long sort of interest in Turkey. But the İLEL Bank is very interesting because it is a public development bank that is owned by the municipalities and the provinces of Turkey, which I think is a really promising model, actually. And I think, I think we should be having some big discussions about things like a new kind of global climate bank, not owned by nations, but owned by municipalities as a way of funding municipal transformations and city level regeneration. But so they have this model in Turkey. And part of that is that it goes back to the 1930s, I believe, when it was first created, and then renamed in 1946 as the Provinces Bank, but is originally Municipalities Bank, whereby its capitalization comes from the fact that the cities transfer their resources and taxes through the bank to the national government, and then the bank holds on to 2% of those transfers, and it uses that as a form of permanent capitalization. And one of the big message in terms of the IWRA Bank in Turkey is really in the title of the article, which is, and I should actually just quote that: "No one can compete since no one dares to lend more cheaply," which probably for many of the public water operators are like, yes, that's exactly what we want. We want the one that can, where no one else would dare give us a cheaper rate because it's already so good. And that's really one of the messages of that bank. That's its specialty, right? In water and other infrastructure and so on. But it's also important because it really becomes a mechanism by which the municipalities in Turkey has been able to access multilateral development bank funds, so cheaper foreign capital, and it becomes a vehicle for drawing in multilateral funds and channeling that into municipalities, the smaller and medium-sized municipalities in particular. There are huge, and the author, Aloysia Gungen, does an excellent job in terms of narrating the challenges of governance. And again, we have to be very, very careful for that. But there are really important lessons in that particular chapter and on Turkey, and how you can have a decades-old bank that is stable and understands its mission of lending cheaply to municipalities.
Okay, thank you very much. That's very thorough. ACU, do you have any follow-up on that, or is that satisfactory? Look, let's see it. I have another. There was another one that came from Shashi from Bangalore, and I think David, you were raising this issue of now that you're looking at expanding outside of Europe. You're finding it's a different world out there, and Shashi is actually working for a state-owned finance corporation in Bangalore, working as an AGM contract manager. So his question again is to Thomas. They're into urban water supply and sewage systems implementation. KfW is in contact with them and doing some studies in 2 of our cities. But the tariff is so low. In fact, in some cities, they don't even have tariffs. And many of the cities don't have any good finances, probably no city in Karnataka. So to give a loan under this scenario, how can you promote public funding, or what strategy do they need to use to improve public funding in a developing country like India?
I can take a little bit of a stab at that. David, maybe you want to jump in on that as well. I mean, that's part of the challenge and the reality, in the KfW case, India may simply not be eligible for more official development assistance, where they can give grant money or mix a kind of can absorb a significant amount of that risk in that case. Because I think when they really give grants and channel EU funds or German development aid funds, it's particularly at a much more lower income level than India. In this case, and I don't know which one you're working for, but India has a very extensive public banking sector, and the NABARD will be a case study in our further research, and it's one we've already worked with. I don't know I wish I had the exact answer on that, and I think part of it would be useful to have discussions among the different providers, the KfW, the national development banks in India, and perhaps some of the multilaterals, because this is coming out one of the messages, at least at this point coming out of COP, is that there might be something like a loss and damage fund coming out, and both the COP27 final announcement, the G20 meeting in Indonesia announcement, going back to the 2015 Paris Agreement, the message has been that the multilateral development banks have to do more, and they should be the ones putting up a chunk of this base grants or initial funding mechanism, sort of guarantee and draw in additional resources. The problem is that much of the global narrative is targeting private finance, so they want to use public money to draw on private finance at a higher rate. My message is we can actually do this and do it better if we just kind of, in many ways, abandon the private sector and just work at proper collaboration between the foreign donors, multilateral development banks, national development banks, and blend public forms of finance and get the job done much more rapidly and on better terms.
Well, thank you.
Jim, can I just make a quick comment on that? And before I do so, there's a post in the chat line. The Water Finance Coalition published a very comprehensive and very useful report last year, looking at similar topics. They're looking at national development banks, so it's a subset of what we're looking at. But just to draw attention to that, people might want to have a look at their very good report. The question with finance is, and this is one of the dangers of talking too much about public banks, is we run the risk of over compartmentalizing finance. And one of the things we want to get across is these are not silver bullets, and we run the risk of focusing too much on financing, getting water operators into these debt traps. I think the issue is to look at public financing more broadly. And if people can't afford to pay for water, you can't squeeze blood from a stone. And so, where is that public finance going to come from? Is it from general revenues, from the national state? Are there other ways of thinking about it? So, over the neoliberal era, the compartmentalization and corporatization of water services has meant that increasingly managers and policymakers think in these boxes of here's our water operator. It needs to be, it needs to be financially independent. And in some cases that might be true. In fact, I don't think there's a single case where it's absolutely true in terms of long-term capital expenditures. But so, thinking about financing within the sector does run the risk of over-compartmentalizing it. And I have a colleague who says, if you want to solve the water and sanitation problem, stop talking about water and sanitation. We need to think about public sector as a whole. And this is where finance is so important, because it really cuts across all of these things. And you may very well just lose money in water and sanitation, because there's so many health and other benefits associated with that as a government, you just say, hey, we're not going to try and cost recover here. We're going to lose money overall, but there's other benefits associated with that. So, and I'm not suggesting that's the approach that needs to be taken everywhere, but we really do need to be cautious of not imposing this kind of unit-based cost recovery model on water operators, because there are some real pitfalls associated with that.
Okay. We have a follow-up question from Shashi, but I think for now we're already, time is getting on. So why don't we go on to the final presentation by Milo, and then after that, then we'll ask this follow-up question. But also, please, that is our full Q&A session time, the last half hour approximately of this webinar. So if anybody else has another question, please put it into the Q&A box, not in the chat box. Milo?
Yeah, hello everyone, and thank you, Chair, and thanks a lot to International Water Resources Association for this invitation. We are really happy to be here in this international context and discuss the thing that is really important for us. Before maybe sharing some thoughts on the work of Davi and Tom's, maybe let me say a few words about the association, the organization that I represent. So Aqua Europa is a network at the European level of publicly owned water and sanitation operators. Publicly owned means 100% publicly owned. We bring together more than 60 water utilities from different European countries, and that includes both operators from big cities like Paris, Brussels, Vienna, or Budapest, or regional operators like Scottish Water, the water operator from the Wallonia region or Apulia region in Italy, and also, let's say, operators for more rural area. And the mission of our organization is, on the one hand, to promote public water management at European international level, and on the other hand, to offer a context to our members where they can share best practices, knowledge, and know-how to address common challenges in water resource management. Going to the work of Tom and David, I mean, first let me say that, of course, we were really happy to collaborate with them and collaborate with our colleagues from the European Association of Public Banks, because indeed, as David said, I mean, their work is filling up a gap in research that was relevant. I mean, we, on our side as public operators, we know the importance of public banks, but indeed the work of David and Tom is really relevant to pinpoint some conceptual element of why the role of public banks for our sector is important. So to be honest, I mean, I don't have many things to add to what Tom and David just said. Also because I would say that we tend to share most of the findings of their work, both on the potential and also maybe on some of the pitfalls, as Tom called them. So maybe the only thing I can do, actually, sorry if I'm going to be boring about that, but is to reiterate or emphasize some aspects of the work of David, of the funding of David and Tom. And in particular, I would like to highlight three aspects, three elements that I would say that for us are particularly important. So for us, for public operator point of view, are particularly important of the work of public banks, and are important precisely because we don't find these aspects, we don't find these elements in our relations most of the time with the private finance dimension. And the first aspect I would like to emphasize is indeed the long-term approach, the long-term view that characterize both public banks and the public water sector. As Tom and David pointed out, public banks can indeed offer that kind of low-cost and patient lending that matches very well the financing needs of public water operators. As you probably know, but even better than me, because of the characteristics of water assets, that is high sunken cost and a very long lifetime of the assets, 50 years and above, public water operators have the interest or the need to maximize the payback period of the finance of the loans in order to match that with the depreciation time of the of the assets. Well, I think we can safely say that many, if not most, private investors are not ready to wait such a long time for their return on investment, nor are they probably so interested in low returns that characterize the water sector, because we are not talking about disruptive new sector, we are talking about providing essential service under a monopolistic regime. What does it mean concretely? What does that involve concretely? But the fact that often when public operators address themselves to private finance for their investment needs, well, either they don't find interested investors, or they find investors that force the water operators to accept financial conditions that are not optimal for water operators given the industrial characteristics. So this is the first element I would like to highlight. The second element is autonomy. Thanks to public banks, water operator can have access to significant funding to support their investment strategy. And differently from what happens with other form of private financing, like, I don't know, equity, but even more recent form of public-private partnership, like performance-based contract, the funding coming from public banks comes without strings attached. What I mean is that with public bank loans, water operator remain the master of their investment strategy, and they remain free to pursue their mission, the public mission, without the risk of compromising their strategy to meet short-term profitability objective or expectation of private finance. Of course, this doesn't mean that funding from public banks is coming without any condition or like a cash machine. First, as Tom was explaining very well, public banks have also their own public mission, public mandate, and general interest objectives that public operators have to comply with if they wish to access their funding. typically, a typical condition that public banks are imposing is to water operators is, for example, that as a result of their investment, public operators are enlarging the service to touch vulnerable people or people in remote areas, or more and more, especially at the European level, what we observe is the fact that public banks are imposing, let's say, sustainability objective like reducing CO2 emission or improving efficiency. The second point is that at least for the cases that also I know personally, water operator had to carry out very strict and pervasive financial diligence operation procedures in order to access this funding. In many cases, doing this due diligence help our utilities, our members, to improve their own financial management capacities. And this happened also with the significant support and guidance from the financial institutions themselves, something that the private banks, commercial banks, are a bit more reluctant to show or less interested to show. The third and final element that I want to mention then is solidarity in the form of public-public partnership. Tom mentioned the possibility, the unexpected result of collaboration and public-public partnership between public banks. Well, maybe public banks can also help to foster public-public partnership between public operators, so between the beneficiaries of their financial support. And there is in this a case that I would like to mention, which is not included in those reviewed and analyzed by the special issue, but I think it's worth mentioning in this framework. And this is a case about a 200 million funding granted by European Investment Bank through a purchase of a bond issued by consortium of public water utilities in the region of Venice in the northern Italy. This region, this area, it's an area of around 4 million inhabitants that is served by around 10 public water operators. And some of these operators try to get in contact with the European Investment Bank to access some funding, but because of the size of the water operators and because of the size of their investment plan that was too low compared to the threshold that the European Investment Bank sets for this kind of operation, they cannot access themselves the EIB funding. So what the EIB did was to suggest to this operator to create a consortium in order to, let's say, to pull together the investment needs, to pull together investment plans, and also a consortium that was, in a sense, created in order to ensure that each operator, each member of the consortium, was ensuring each other in case one partner failed to repay the bond. So it's sort of cross-securitization or mutualization of the risk. And by creating this consortium of water operators that pulled together the investment needs, they could access the financing from the European Investment Bank that actually bought the bond issued by the consortium of water utilities, and that the money was shared among the members of the consortium. But the fact is that not only this operation allowed the operators to access the funding, but the creation of this consortium was the first step of a much larger process through which the members of the consortium came to share other advanced functions in the consortium, like common research activity, common purchasing activity through public procurement. And so thanks to this, actually, they created a new entity that is grounding on a mutual solidarity of their members that keep their autonomy, but these allow members to do things that otherwise were not able to do, or do it in a more efficient way. So to conclude, let me say like this, not only public banks are important partner of public operators precisely because public banks, better than other type of finance, meet the investment needs of the public water sector, but they can also play a role for the growth and improvement of water sector itself by providing technical capacity, by providing expertise, and by promoting also positive dynamics sometimes when some operators are a bit lazy or reluctant to, let's put it this way, to pursue a certain objective. Thanks a lot.
I have to unmute here. Okay, thank you very much, Milo. That was very good presentation from the standpoint of the practitioners. We have to go to that follow-up question. This is the one in India. Do you feel that private operators involved in water supply and sanitation is a way forward in India? Because that's a question everybody's asking him. But would it allow an opportunity to improve services and finances if they went over to private operation? I think we've already touched on this previously, that you don't think that's the way to go, but maybe you'd like to elaborate on that.
Well, I mean, to be very honest with you, I cannot say I know enough of the situation in India to express on any knowledgeable assessment of that. I would tend to share David's view of what David just said on that about the what happens if there is not the capacity to pay in any case. I mean, what is sure is that as I was saying, financing investment in the water sector needs a lot of money and a very, very long time span. What are the private financiers, the commercial bank that are ready to do so, given also uncertainty situation? I don't know. The situation in Europe maybe is very different. But in any case, also in Europe, I mean, when I talk with the members of our organization coming in particular for Eastern Europe, they benefited significantly from public grants coming from the European Union to support their investments. Then maybe European Investment Bank or other public banks stepped in, or even probably commercial banks stepped in to support the investment. But at the beginning, there were public grants transfers coming from the budget of the European Union. So in some situation where there is difficulty to pay, some form of public support is needed in some way or another.
Okay, thank you very much. Anyone else want to answer that? Thomas, or something?
Sure. You know, I agree with everything he says, and David on this, of course. But yeah, there's just no getting away from the fact this is really a difficult and tricky issue. Like, the public banks themselves are not going to be, the silver bullet to it. There's going to be a need for substantial public investment, and there's going to be a need for a transfer of funds from the wealthy to the poor, and there. It's just not going to be the case that a cost recovery, profit-oriented model is going to resolve the challenges of providing equitable, clean public water in the global south, where there's just not a capacity to pay for that. And so there's going to be some big political decisions around that. I was just about to post an article, the one piece in the special issue on the KfW development bank lending in Latin America, which the author Nadine Rice does a really good job of tracing out some of the challenges, and part of that is finding the right kind of operators in the country who are going to deliver the water, can do it well, because in the case of the development bank, there's going to be some concessional lending involved, but yeah, there's no doubt they're also responsible to their shareholders, their stakeholders in society, and so the KfW is also worried about its lending, and so it's tough. There's no doubt about it. Public banks are an element of overcoming those rough grounds. They're not the only answer, but we need to begin to break open this discussion. And we're starting to have it, and some of these discussions are starting to be had at more systematic level. So I notice there's people here from the French Development Agency, AFD, the Finance and Commons Summit. We're having those discussions at a multilateral level. But the idea that we can just resolve all of this through generating profits in return is, a dead end. In many cases, that's going to be quite literal.
Yeah, thank you. We have it's actually not a question, but a comment over in the chat section, but I think it's relevant to this. It's by Catarina Fonseca, and saying that looking at sub-Saharan Africa, and that in her experience, mostly sub-Saharan Africa, there are still very few public development banks working in the water sector, and they offer high interest rates, often double digits. Some of their interest rates are even higher than the commercial banks. And it's unclear why that's the case. Does anybody have an explanation?
I'll maybe comment on that because I'm in the middle of coordinating this research. So we actually looked at the African Public Bank Association, and we're in communication with their head office, et cetera. We managed to find 4 banks in sub-Saharan Africa that do some lending in the water and sanitation sector, at least explicitly. Maybe some indirect lending there. So out of more than 60 public bank members, very, very few actually mandated to lend in the water and sanitation sector. So that in itself says something. And even on that front, I'm doing work right now in Uganda and Tanzania, and we're looking as well at the DBSA in Southern Africa. But in the Ugandan and Tanzanian case, it would appear that a lot of that lending is being done in conjunction with or even financed by some of the larger multilateral banks like the World Bank, the African Development Bank, KfW, and the Finance in Common people have actually have identified this. So now whether that's a good thing or a bad thing is unclear. But I think what it highlights is the need to build capacity amongst public banks in the South. And there's a useful comparison here with the water sector. These public-public partnerships have been a big part of the water sector for the last 30 years. Some of the listeners may be familiar with Aqua, the UN mandated organization that creates water partnerships amongst predominantly public water operators. And there's a lot of north-south and south-south cooperation on this front with water operators working with other water operators, and everything from technical issues. I think it's predominantly technical issues. There's not a lot of financing stuff going on that front, so that would be something. But we could probably see similar things going on with some of the better public banks in the north. The Water Bank and some of the Scandinavian banks. What do they do that allows them to work with the water and sanitation sector? And how could that be facilitated through other multilateral banks, for example? So we see, the regional banks do work with each other, and the EAPB, the European Association of Public Banks, have regular meetings. They're, sharing experiences and networking, et cetera, with each other. And there is indeed a global, association and Finance in Common network is starting to bring that together. So we are starting to see the seeds of that kind of collaboration. But I think the water sector has taught us a lot about the potential benefits of public-public partnerships, where institutions work with each other to build capacity, and seeing that in the public bank sector could be quite productive. And I stress the could, because there's a lot of public banks in the north are problematic, very commercially oriented, and not necessarily mandated to promote publicness, but rather to figure out ways to bring private finance and the private sector in. So I think we need to be careful what we ask for on this front. But certainly, capacity building amongst public banks could be quite a beneficial thing.
Okay, we have one more in the question and answer. It actually ends with a comment, and I think it's one we can all agree on. It says, "Thanks for this super interesting webinar." But the question is whether or not there's a correlation between the remunicipalization of water utilities around the world and the use of public banks for water infrastructure lending. As I recall, you found that to be kind of a tenuous connection, right?
I'll just make a quick comment, and then there are 2 case studies in the special issue that look at remunicipalization in the case of Paris, France, and in Spain as well. So direct the questioner to those 2 case studies. But I would say it is an area of research that desperately needs to be done. And one of the biggest obstacles to remunicipalization is often not having the finance. And so I'll leave it at that, and maybe Milo can comment.
For so that we suggested this topic was it is indeed very, very fascinating, and we would like ourselves to work more on this probably. But my very basic reply would be like something like that, at least for what we see in Europe, in many cases of remunicipalization are the result also the fact that the private model was not able to deliver on what he promised to deliver, and in the capacity to, particularly to provide a good service to anyone at affordable costs. And that's why municipalities or other public authorities decided to bring back public management, water management in public hands. So this incapacity of private management to deliver on what was promised can find a parallel within the incapacity of private finance to reach out and deliver what is needed, but not because private finance is nasty finance. It's just that it's not in their interest. They cannot reach that point where indeed beyond that point where you provide just an essential service for those who can pay. You need some form of public redistribution of what is needed. So the parallelism is in the fact that the private model, whether in the management dimension or in the private financing, is not able to offer a universal service. Maybe, yeah, to be explored the work of David from another academic.
Okay. Yeah, the Paris case is fascinating actually, because I think it was one of those that really didn't. Apparently, they already had another form of funding that was kind of institutionalized form of funding that meant they didn't have to go to public or private finance. Okay, I see Lindsay is coming up here, but we do want to close on the half hour, and it's 12 minutes from now. So perhaps does anyone else have any more questions in the chats or the Q&A? I don't see any. Okay. Perhaps maybe we can go around if you have any kind of final statements or any statements that are final for this phase, and we hope to get back to you after you've done your worldwide study. Start, I guess, in the same order of the presentations. David, you'd like to make a closing statement?
Sure. I'll just say one thing. I realized I hadn't posted it to everybody. It's now in the chat line, the Municipal Services Project website link, where we have lots of our publications related not just to water, but a wide range of services. And I'll just close by saying that I think we need to see public banks as another public utility in the same way that we look at water and electricity and transportation. But it's a unique one in that it really does cut across all public services. And how are we going to finance the transition to renewables, the massive shortage of water and sanitation infrastructure? History over the last 40 years has shown us that it is not going to come from the private sector. It's certainly not going to come from the private sector in low-income neighborhoods and parts of the world. So we desperately need to figure out how we're going to generate the public finance required for desperately needed water and sanitation services, and public banks, frankly, appear to be an important part of that equation.
Okay. Thomas?
Sure. Thanks, Jim. I would say that, building on what David said, there's really big challenges, and thinking forward, there is an enormous amount of scope to really think through the potential for greater public collaboration, both through the forms of public banks and into the public sector like water, but also energy, housing, and so on. This relationship has an enormous potential to really, let's say, catalyze and move forward at the pace and the scale needed for global green and just transitions in water, energy, sustainability. And we need to make much more of that. And it is remarkable that we know very, very little about the relations between the multilateral development banks and the national development banks. They're lending. Neither of these institutions are reporting on what they're doing with one another, systematically or coherently. There are no binding mechanisms by which to hold each other accountable. And there is no form of metrics that these institutions are using that are agreed upon and credible within the communities in which they're investing to sort of hold these institutions from the ground up accountable. So I would say in this community of public water and water provisioning, there is an opportunity to begin engaging with public banks at the national, local, national, and international level to begin commanding of these institutions that are ultimately publicly owned, to be more accountable, more transparent, more democratic, and for them then to be a forum to begin, demanding those resources needed from national government authorities to channel through the banks to the local communities that need them, because they can be really effective entities and institutions at that level that have those relationships with public water operators, with other public banks. And they become these spheres of expertise and capacity for outreach, but they're not being utilized to the extent that they can be. They can't resolve all these problems on themselves. So they must be in a way better connected to the question of resolving these big challenges like sustainable water, sustainable energy, sustainable housing in ways that are not just financially sustainable, but ecologically and socially sustainable and just. And this is where there's enormous potential that we really have to take advantage of. And then that is then pushed out onto that responsibility for holding them accountable. It's pushed out to the water community, to the energy community, to municipalities, and so on.
Yeah, I think from an institutional standpoint, one of the big challenges is accountability, as you say, and governance in general. And that also underlies a lot of this discussion here. We've put in a plug for the OECD water governance principles, on which we've had 2 special issues. And recommend you read those if you want to look further at that. And Milo, do you get to close the session?
No, it's not such a responsibility. But I mean, from my point of view, I would like indeed to follow up to what David and Tom was saying now. And I particularly noted down something that David was saying, and that actually he was reporting a comment from a colleague who was saying, like, stop talking about water and sanitation. Let's talk about public sector in general. And this is a point that for us, it's really relevant in the sense that we organized ourselves a seminar last week on a new important legislation coming up on the European level on wastewater, on the wastewater treatment sector, with new very strong requirements on energy efficiency and treatment, very, very high demand requirements. And some of our members were a bit complaining, saying, look, that's good, yeah, but that the final result of this is that the tariff will be increased in the coming years. I mean, the cost for the user will be expanding because of the requirements. So that will be more and more affordability issue probably in Europe. And we had a colleague from the Scottish government that who is in charge of both water and energy operation. And he was saying, look, you need to look comprehensively what is needed in terms of energy, in terms of water resources, and how we provide both essential resources to our citizens and where they are. And only if you look comprehensively to the needs, you can find the right balance. I think this is an interesting avenue to explore, and unfortunately, it's not what we often observe in Europe, where on the contrary, there is still this very sectoral approach and the requirements that are not thought in a comprehensive way. And sometimes I bit, I don't want to be malicious in that, but there are also responding to some industrial corporate interests whereby we don't see really a coordination or the conditions that are put by the legislation to promote integrated project at local level. We can take the most, seize all the potential of both energy, water, and housing sector, for example. These three dimensions that we see very, very, very close. So I really hope that future work, but also future policy work and advocacy will try to more and more to, as Thomas and David was saying, to try to promote this integrated view on how our resources are managed.
Okay, thank you very much. And now we have 4 minutes left before the end, and I turn it over to Lindsay to see us out.
Thanks, Jim. Thank you to each of our panelists today, David, Thomas, Milo, and Jim. Thank you guys for being here. And a big thank you to our audience also for this conversation. I know I learned a lot. I feel like this discussion right here needs to be talked about more. And so it was fun to also go through the chat and see kind of the need for discussion taking place here. I just posted in our chat lots of information details for the audience. Many asked for webinar presentation and recordings. In a few days, we'll have those uploaded for you. You guys can access them there. Feel free to copy and paste that link. Also, more information on becoming a member for IWRA is in the chat box. And we have a couple of events that we would love for you guys to get more involved in and save the date for. So you guys can right there in the chat, copy and paste the information. And again, we'll have those presentations up in a couple of days. And again, thanks for being here. I hope you guys have a great day.
Thank you very much.
Thank you a lot. Thank you. Thank you.
Thank you very much.